Hello, everybody. Welcome to another episode of the TF Podcast, where we discuss technology and business, and sometimes that revolves around Bitcoin and cryptocurrency. I'm excited for my next guest. His name is Brock Connelly. We're going to be talking about Bitcoin futures, the CME, just how people invest in this interesting asset. And so, with that, Brock, I'd love if you could introduce yourself to everybody.
Sure. Thanks, Jonathan. Great to be here. Great to be talking to you in these interesting times, of course. So Brock Connelly. So I'm founder of a firm, Round Block Capital. We are an NFA registered, CFTC regulated futures and options broker. We're specializing specifically in the digital assets derivatives space. So what that means these days is basically Bitcoin futures and options.
Nice. Well, well, thank you for joining us. And, I'm assuming you probably had some level of background in derivatives before you started exploring the Bitcoin side of that. I'd love to hear more about that.
Yeah, definitely. Well, the deep background in traditional derivatives markets, you could almost say that I grew up on the trading floors of the Chicago exchanges, Chicago Mercantile Exchange, Chicago Board of Trade. In terms of professionally started trading and offering brokerage services, 2004, I bought my seat. So I'm actually a member of Chicago Mercantile Exchange and one of the 625 seat owners worldwide. But we have a kind of a family history going back. So my father was a member of the exchange. My brother is still a member of the exchange and is an active trader in actually the livestock sector. So essentially kind of a little background of how I kind of matriculated into it. Junior high and high school, I actually worked as a runner on the trading floor, meaning that orders, these were back in the days when orders were filled in pits by guys wearing jackets, standing around screaming bids and offers at each other. And so orders would, come in over the phone. They would write the order down an order ticket, hand it to a runner would bring it to a broker in the pit. The broker would fill the order. This is really how, stocks, bonds, futures, options were done, until the late 2010s, right? Until pretty much all went electronic. It was a slow process from 98 up until 2010. But so in about 2004, I was working in tech consulting, had this, background kind of being a student of markets, didn't like the whole corporate thing, walked onto the trading floor, bought a seat, and I was actually a market maker in a number of different futures pits on the Chicago Mercantile Exchange.
Real quick, for those that might not be familiar with the term market maker, what does a market maker do?
Yeah, so market maker is an integral part of any financial marketplace. Now market makers are essentially algorithms sitting on computers. And a market maker is someone who always makes a bid and always makes an offer, provides liquidity to the marketplace in any financial instrument. So back in the day, these were guys standing in the middle of the pit. We called them locals. An order would come into the pit. The broker would say, "What's here?" And all the market makers would give a bid and an offer. The broker would fill that order, against the market maker. So that's essentially how it's done today. Although now it's done by, about a dozen firms, names you've probably heard: Jump Trading, DRW, Citadel, Susquehanna, proprietary principal trading firms that are making markets electronically in the crypto asset space. Many of the same names are participating that way. But yeah, I mean, a market maker is someone who provides liquidity to the marketplace. It's a service, and they make their money by taking the difference between the bid and the ask. And now, like I said, it's done, sub milliseconds or milliseconds, whereas
Right, right.
before it was, done in a pit.
Yeah, definitely, definitely. So yeah, sorry, keep going with your story then. So you're a market maker on the CME for a while.
Yeah, market maker was in equity indexes. Dabbled some in grains, but eventually ended up kind of where my family had a history, which was in the livestock futures. So this is hog futures and cattle futures, essentially. And so built up a book of business and decided that I didn't want to just trade my own capital after about 3 or 4 years. So essentially, what I did was I was an executing broker, an advisory broker, helping commercial participants in the hogs industry, hedge their risk in the marketplace.
So when you're
Um,
buying hogs, for example, are
mhm.
you how does that work? Are you buying in futures? Is it just that? So you're saying like, hey, like securing this price of hogs, through this date? Is that how that works?
Right. So, and we can get into a little more about, the underpinnings of futures markets and why they exist, but it's essentially a hog producer that has so many heads of hog on Iowa, on a farm in Iowa or North Carolina. And these are large, huge commercial production facilities, right? Their risk is that the price of pork goes down or hogs go down because they actually own hogs, right? And they raise them and they sell them to packers who break them down and sell them to supermarkets and what have you. And so they're fine as long as the price of hogs is going up. The problem is that this is a commodity with, supply demand dynamics like any other commodity. Sometimes the price goes down. They need to be willing to go into the futures market and sell futures contracts against their underlying positions in what we call the cash or the spot market, their underlying, hogs. And so, if the price of hogs goes down, they actually make money on their short positions in the futures market to offset the money they're losing selling their hogs in the actual hog market. And in fact, this is, really the two main reasons why futures markets, were forward markets and things like that came into existence. For a central place around the world for participants to come in and conduct price discovery, right? So you have a central place where a price of any commodity or asset is agreed upon. And the second reason are for risk management properties. Anybody who's a producer or consumer in large scale of commodities uses futures markets to hedge risk on the actual product or financial asset that they have holding underlying. And so, that's what we were doing. At the time, this was, 2004, 2005, China was just coming into the market in a really big way in terms of commodities. And so if, you might remember, this is the time when crude oil went from $30 a barrel to $130 a barrel. Essentially every commodity around the world, was up even after the financial crisis until, that whole thing came crashing down. There was a really big run in commodities, and 2010, came back down, and really it's kind of been skimming along the bottom until very recently, to be honest. We can talk about that more as the world central banks are pumping liquidity into the system.
Yeah. Let's definitely talk about that more.
Yeah.
To round to round that out, you started getting into Bitcoin a few years ago, right? And just basically saw there was a level of commonality between hogs and Bitcoin, huh?
Yeah, more or less. So kind of where it went from there, 2011, 2012, most of the liquidity, in trading matriculated from the trading floors onto electronic markets on the CME, the Board of Trade, every, financial asset in the world. So, at that point, we kind of, our brokerage, firm had to make a choice, do we kind of make this transition, servicing customers in an electronic fashion, or do we kind of go our own separate ways? At that point, had quite a run. So it, in fact, picked up from Chicago and moved out to the Northwest where I am now. And really, we traded for some family accounts, just in a principal fashion, traded for my own accounts for 5 or 6 years. But as you remember, during that time, volatility in the marketplace, in equities and bonds and all commodities came down in a big way. But there was this big outlier of this thing that was called Bitcoin. And so I personally was introduced to Bitcoin purely from a trading perspective. It was the one thing that people were starting to trade that had volatility. And as a trader, that's generally what you're looking for. And so, participated in some projects, really early, 2015, 2016, traded, Bitcoin, over the counter and on exchanges, but, mostly was just kind of paying attention, to the underpinnings of the market. And from there, of course, did all the things that everybody does to fall down the rabbit hole of, learning about this technology. And the more and more you learn about it, the more fascinated, of course, you get by it. And so I was pretty much sold, in 2016, in 2017 on the space in general. About that time, CME, there were rumblings in Chicago that they were, thinking of listing a product. And so, all of a sudden I had old customers and people from my network calling me and saying, how do we get involved? How do we actually trade on the CME? And so, I was kind of one of the few guys in the space that came from the traditional world, yet understood, the digital asset world. And so we, decided to start going through the process of registering an independent brokerage house that would specialize in these Bitcoin products.
Yeah. So, what is that analogous to? So, if I'm a, retail investor, what do I do currently that might be similar to how someone would interact with Bitcoin futures?
Well, there's a number of different ways. Of course, a lot of the retail brokerage houses, TD Ameritrade, Interactive Brokers, TradeStation, you could trade stocks on a retail basis and also trade futures, from the
Yeah.
from the same
So,
accounts
so
essentially.
basically, it's the same. It's a it's a new class, but the instruments are essentially the same, right, as what you would do with these other uh,
Yep, correct,
assets.
correct. So yeah, I mean, in terms of CME Bitcoin futures, to the trading world, it's the CME Bitcoin futures is just another product. It's just like if you were trading E-mini S&P futures, crude oil futures, gold futures. Now you have a separate product, a newer product, right alongside of all of them, in CME Bitcoin futures. Now, that being said, you can't, the gates have not totally opened in terms of, being able to trade, from an independent individual, investor standpoint. There's still a lot of restrictions placed on that. This is, the CME Bitcoin product is very much an institutional product, because, simply because it's a large, it covers large, underlying five Bitcoins contract is a CME contract. So, notional value, right now, $51,000. For margin, you have to put up about, 35, 36% of that. So for a lot of, individual traders, you don't have a lot of Robinhood type people, no offense to that moniker at all, trading the CME Bitcoin futures. This is still very much so an institutional product.
Yeah, yeah, definitely, definitely. So as it's become more institutional of a product, and it's a different way to get Bitcoin than going to Binance or Coinbase or some exchange. What does that do to the overall credibility of Bitcoin? And like, how have you seen the perception of Bitcoin evolve? Like in the CME, for example, or like in those spaces as a result of having these futures tied to Bitcoin. How has that narrative or impression point of view changed?
Yeah, it's a great question, and I'm glad you asked it. And it's an interesting dynamic from people, kind of how they perceive, regulated cash settled futures on Bitcoin in the marketplace. And kind of here's what I mean by that. I'll start by saying that, as a firm, we're a little bit of an outcast because we operate under the regulatory umbrella on the traditional side, but we're also interacting with a product that is largely worldwide, unregulated or uncategorized. And so we kind of have to have the people that we deal with, the exchanges and the clearing firms are not totally sold on this, on Bitcoin as an asset class yet. It's there, it's listed, it's seeing great growth. It's not, euro dollars futures, interest rate futures, equity futures by any means in terms of volume. And then you've got the people that are like, on the pure crypto side saying, this is an asset that doesn't need institutions. You should be storing your own keys. You should only be owning physical Bitcoin. And I remember even being at a conference about a year ago, and there was a prominent crypto money management there. And I remember him telling the crowd, Bitcoin doesn't need an ETF. It doesn't need CME futures. And of course, everybody in the audience cheered and clapped. And I totally respect that frame of reference. But in my personal opinion, the actual world, does need regulated futures. It does need an ETF. And, let me explain why. First of all, Brian Armstrong, the CEO of Coinbase, I was listening to a podcast. He brought up a really good point. Their goal as a firm is to, facilitate worldwide adoption of crypto assets. Us as a brokerage firm, our stated goal is essentially the same thing: facilitate the growth and liquidity in digital asset derivatives markets. You've got trillions of dollars, sitting in traditional finance in fiat currency that needs to be transferred over into this, digital financial world, right? Native digital. In the future space, we see the exact same thing. Most of the large institutions that have a fiduciary responsibility, they do not have the mandate from the regulators or from their LPs or their investors to go out and just buy Bitcoin, self-custody it, or even bring in, a custodian. Like, the easiest way for them to get access to this space is through a regulated futures product. That's one main reason why, the CME product is so important. That being said, I also think that, your Coinbase and Krakens and Binances of the world are also super important. I also think the unregulated offshore futures exchanges are super important. BitMEX, Bybit, Huobi, OKX. All of these, different venues serve a purpose, and for the most part, they're all thriving. The CME, for better or for worse, is these contracts are thriving as well, and so that's kind of a convoluted answer to your question, but we kind of sit in this middle area where we're trying to bring these two worlds together, and sometimes it's a little bit challenging.
Yeah, definitely. So, with your firm that you started, what is it that you do, and what's, I guess, the angle that you're looking to take on in this space overall? Are you supporting retail investors and they work with you, or are you working more with institutions? How does that work?
Yeah, so I mean, our core offerings are clearing and onboarding. So Well, I guess to answer the initial question, we kind of have cast a wide net in terms of different categories of traders and participants. Most of our customers right now happen to be institutions. Most of them actually happen to be non-US institutions for one reason or another. But we do have smaller independent traders that come on. We do have, quote unquote, retail traders who are getting involved in the space. And we're happy to service them all in a number of different ways. So really kind of the value we bring to the space is, you know, uh, in order to trade on the CME futures, you need to have what they call a clearing member, a clearing broker, someone who actually holds the margin and clears the trades. So our customers come to us. We have a number of FCM clearing brokers that we work with. Depending on which one is best for the customer, we'll open an account at the FCM. And these FCMs could be anywhere from large bulge bracket banks, JP Morgan, Goldman Sachs. There's about 35 or 40 of these clearing members, all the way down to really small independent FCMs that are in Chicago or what have you. So we'll find the most appropriate clearing member, open up an account there, money is deposited. From there, the trader needs execution services, so how they actually going to place the trade. So we have our own simple web-based platform that we could offer, a retail customer where they simply log into our platform online, place a trade like they would on, any other retail platform. And then from there, advisory services. If a large holder of Bitcoin needs to come in, hedge risk. These could be OTC desks, actual underlying spot exchanges, proprietary trading desks. Any guy that bought like 100 Bitcoin, 10 years ago that's just sitting on it that needs to hedge out risk or earn yield. And then we also act as what they call an interdealer agency broker. So, customer comes to us and they say, we want to buy, 1,000 Bitcoin futures. Go out to the market makers and, they're not going to, execute that trade on the listed order book. They want to do that over the counter and cleared over the counter futures. So they'll come to us and we'll aggregate the liquidity for them and place the trade. And so, from there, that's kind of how we started from the listed futures, from the regulated standpoint. We're slowly entering, the spot OTC side. So, customer will be able to come to us and say they want to, buy spot Bitcoin over the counter, but they also want to sell futures at the same time to hedge their risk. We will have connections to spot OTC. And we're also, building in a borrow lend desk for Bitcoin. So a lot of these, terms, offerings you probably see thrown around about prime brokers.
Sure.
We don't consider ourselves a prime broker, but we kind of eventually are building up to the point where our customers will be able to come to us and execute and operate on any venue worldwide, be it futures or underlying crypto.
Yeah, very cool. So when you say that, like they would kind of just tie into what you're doing, or how would that work?
Yeah, I mean, for the most part, in terms of execution, we offer them our platform. Most of these traders are sophisticated, and they are essentially making their own decisions about what to do in the marketplace. They're executing themselves. We're simply providing them the tools, platforms, API connections, and clearing to be able to facilitate that. If they need, advisory. Whoa.
Lights went out.
Yeah. Someone's telling me something. If they need advice on how to place trades, or where the volatility is in the marketplace, where the basis is, of course we're able to help them with any of those decisions. So yeah, in a sense they're kind of tied into what we're doing. A lot of times we're essentially just supplying the infrastructure in a regulated manner.
Yeah, super interesting. Well, moving along to just the broader market and how, institutions have gotten involved with Bitcoin and, financial institutions and so forth. Back in March when everything crashed, for it feels like a blip now compared to where everything's been doing, but it seemed as though a lot of these institutions that had positions liquidated or, got out of positions and so forth. And my question is more around like how much impact or influence do you see financial institutions having on Bitcoin adoption and without speculation, like even Bitcoin price? Like how did they influence, what's kind of going to happen, what did happen then, and then what can happen, moving forward?
Yeah. So, in terms of like the price action, what happened in March, of course, a lot of that was tied to, the underlying, financial markets.
Sure.
People were throwing anything overboard that wasn't nailed down. Of course, Bitcoin or, crypto assets are way out on the spectrum in terms of risk. So they were one of the first ones to be thrown overboard. The fact that you had, a lot of these, offshore exchanges that offer huge leverage, in the, Bitcoin and Ethereum markets, that didn't help the situation at all. And so that was kind of a contributor. Um, since then we've seen, a steady stream. Everybody always talks about when are the institutions coming. I would argue that most of the infrastructure is in place, and it's simply a matter of people getting over some type of cognitive hump on how you should value these things, and and what your thesis is to your investors if you're managing money. I do believe that it's happening. If you look at the at the open interest on CME, it went from about 200 million at the beginning of the year, almost up to a billion at its high 2 or 3 weeks ago. It's since come down from that. You could look at it, fortunately or unfortunately, it's been fairly highly correlated with traditional assets, equities, bonds, metals. Some people think that's a good thing. Some people think that's a bad thing, depending on how you look at it. But institutions going forward, just like any other asset class, will probably be the ones setting the price, simply because the money in their positions is larger. If you're some type of institutional investor and you're holding large positions and you need to exit in the marketplace, you're going to make much more of a larger ripple. And so I think that venues that cater to institutions will probably be setting the price for Bitcoin more and more going forward. But that being the case, like most of the liquidity and most of the price action is still on what you would consider non-institutional venues. And so we're definitely still in that transition period. And but I do think that it's changing.
Yeah, yeah, it's interesting. It's for the most part, Bitcoin has been, I'd say, relatively stable, right? Like in comparison to, what it had done. And, sure, it was, I guess it went up to as far as like maybe like 12.5, and right now it's probably hovering right around 10,000 last I checked. But yeah, it seems like, attention on Bitcoin and awareness is higher than ever, right? Like it's you have some of these financial gurus getting involved, like Paul Tudor Jones.
Mm-hmm.
You have companies who are, well, I think it's Micros. I can't remember the name right now, but that they just got, I think they bought like 1% of supply to
Right.
hold as what's the name of the company? Do you know off your top of your head?
MicroStrategy. Yeah.
MicroStrategy, yeah.
Yeah.
Yeah, so 1% of supply to hold as asset. So
Mm-hmm.
yeah, it's definitely has changed quite a bit.
Yeah, and I think you're going to continue to see a lot more of that. Obviously, the geopolitical, financial picture, ties into that a lot. But I can tell you, just from a personal basis, I can't name names. There's some we get on incoming from institutions that even 6 months ago we would have never imagined in a million years would be talking to us, or people at the exchange, or people, in clearing, and counterparties. It's almost quite shocking how fast that it's come around. That being said, when an institution, again, comes on board to invest in some of this, in these assets and to trade these assets, it's a very long process. It could take 6 months or a year for these folks to even open up an account, right? It's, it's a longer process, and I think it'll keep going that way. From a personal perspective, when I first got into it, the whole talk about Bitcoin itself being a reserve asset, even for sovereign nations, or acting as some form of reserve, to me was absolutely crazy. The more and more that I'm in this space, the more that I realize that Bitcoin is collateral, is almost pristine. Central banks have always held gold in their vaults, acting as reserves. Now most of the reserves in the world are U.S. Treasuries. Of course, as world central banks come in and kind of bastardize that relationship, you see people looking for alternate stores, alternate forms of collateral. And I actually think that Bitcoin itself at some point will be one of the world's reserve assets. I'm not saying that it will be the world reserve asset,
Yeah.
but it will definitely be in that mix. It's a collateral that's digitally provable. You always know who owns what, and where it is at all times. No one else has a claim to it. And on top of that, there's only 21 million. There will only ever be 21 million in existence,
Yeah.
and so I don't see it going back the other direction, to be honest.
Right. So moving outside of Bitcoin and just overall market in derivatives and just kind of how that works in futures and so forth is, what does the world of derivatives and futures look like in a pandemic? Like, is it are people more bullish, or I don't want to say bullish, but like, are people more interested in futures? Are they less interested? What does that look like in these times?
Yeah, it's a good question. So, I mean, from a pure volume perspective, volumes and futures and options across, all asset classes are up during the pandemic. You know, Anywhere from, and people speculate to why this is. People have, I guess, less to do, less going on, and they're needing something to speculate in. There's, depending on how you structure different futures products or derivatives, they could be higher on the risk spectrum. People are searching for yield, and so they'll come into derivatives markets to gain leverage and access to these different products. And so, yeah, I mean, during the pandemic, I would say that higher adoption. And then there's also the case that, purely speaking to commodities and other financial assets, when world central banks dump a bunch of liquidity into the marketplace, it has to go somewhere. And so, as I mentioned before, that's kind of another reason you're seeing, all assets, all commodity assets across the board go up. Of course, we've seen equities, go through all-time highs. Bonds have stayed bid. Gold is at all-time highs. Silver, kind of the same thing. But even you look at agriculture commodities, other base metals, essentially everything is up in this environment.
Everything is up in this environment. That's true, right? Like, there's that guy, David Portnoy, the Barstool Sports guy. Is like, stocks go up, stocks only go up.
Right.
I know it's interesting. And do you think anything changes that, or do futures typically follow the market, like the stock market, or like what's the correlation across other instruments?
Yeah, well, again, in these times, most things, get pretty highly correlated because everybody essentially is just betting on, more supplies of dollars and less supplies of everything else, which is, you saw the dollar for, 3 or 4 years against all other currencies have a pretty good run. The last 3 or 4 months, it's totally turned the other direction. Um, and same thing, pretty much across the board. This won't go on forever. In fact, we're starting to see some cracks now, and now it just kind of turns into again, following the central banks and trying to get a feel for how much liquidity they're going to pump into the system. Um, for Bitcoin itself, I'm the macro picture obviously has a lot to do with it, but the underlying technology, the usefulness of the technology, if you look at hash rate and average transactions per day, and anything that's done on chain, these indicators are all up in this time as well. And so you know, you will get, like I tell people all the time, I remember during the financial crisis, I was trading cattle, like even cattle futures were correlated to equity futures during that time. And, it used to frustrate us so much because, we couldn't put together really feasible trading plans, for our customers. And so you're seeing a lot of the same thing now. We're kind of at the whims of, the externals. But eventually those types of things have a way of breaking free. You never know when it's going to be, but it'll come definitely. I kind of think that for a lot of these, the Dave Portnoy's of the world, probably most of the easy money is has been made. But then again, there was a lot of institutions, a lot of really sophisticated investors that were actually short the equity market, or short any God knows what, and had their face ripped off the last 3 or 4 months, and never would have expected that. And that's always these guys is they were short, the market was rallying, they had to exit their positions in a big way, and that just added fuel to the fire on the upside. I think a lot of that has been liquidated and kind of worked out of the market now, and so we'll see. Anybody's guess.
Yeah, no, that'll definitely be fun and interesting to see what happens. Do you have any predictions? Do you have a crystal ball?
No, I mean, my crystal ball would be this is probably, in equities and even in Bitcoin, probably more of a range trade through the election. We're probably going to, bounce around, and then, kind of see what comes out. If there's new leadership in the world central banks, or, in the White House or in the Senate, what have you. I think it's going to be a volatile time for the country and the world in general, through Q4. Nothing would really surprise me, but I think you'll in the underlying markets you'll probably see volatility come down, and just everybody kind of waiting, what's to come. That being said, I like I kind of said before, I still think there will be continued adoption in the crypto assets markets. I still think we will have traders come to us that need to manage risk, manage volatility risk or basis risk in the marketplace, and we're going to see continued growth going forward. Getting back to our underlying thesis, eventually all equity, all debt, all commodities and derivatives, and all currencies are going to be tokenized and digital, or themselves natively digital. I think all assets will eventually sit on a custodian, be it qualified or unqualified, depending on where you are in the world. Your assets will be held there. They will those custodians will be connected through APIs to different clearing and settlement and execution venues around the world. And Bitcoin will be the underlying collateral that kind of underpins that whole situation. I still think we're years from, that sort of financial setup. But, I think that's essentially the way it's going.
Yeah, it's a good prediction. We'll see if it happens.
Yeah.
Brock, thanks so much for joining us. My last question that comes is, what is a question that you have for our audience that they can think about as they go about their day?
Yeah. So I guess the question I would have is, what would be your risk in not putting a fraction of your portfolio into Bitcoin or digital assets?
Yeah, what's the risk if you don't? Yeah, I like that. Brock, what are some good ways that people can follow you, stay in touch with you, pay attention to what you're doing?
Yep. So we're on Twitter at round_block. I'm fairly active on Twitter on a daily basis. My personal account, I do a CME Bitcoin market recap after the market closes in the afternoon, and it's at Digital Brock, all one word. And roundblock.capital is our website. And yeah, reach out. We're always happy to talk to anybody who's interested in learning about derivatives on Bitcoin.
Awesome. Thanks, Brock. Appreciate you joining us.
Thanks, Jonathan.
Everybody, thank you for watching and listening to another episode of the TF Podcast. Please do us a favor and make sure that you are liked and subscribed wherever you're listening to this podcast. Also, you can follow me at JG Product on Twitter, as well as TF Labs at TF Labs _. And if you want to learn about what we're doing at TF Labs with our startup studio, as well as some of the projects we have going on, you can learn more at tflabs.io. Thanks so much, and we'll see y'all soon.